Hello and welcome to the final Citrus Mortgage Bytes for 2024. Today, I'm joined by Holly Bettles, Mortgage and Protection Advisor at Citrus Financial. And I'm going to be talking to Holly about some of the really reflecting as well a bit on 2024, but also where does it leave people heading into 2025? So I was doing that myself, thinking as I was looking at information earlier in the year and we were recording Citrus Mortgage Bytes, what were we talking about? And we were talking about earlier on this year, high interest rates, high inflation, still relatively high property prices, low levels of unemployment, relatively high levels of pay, so wage growth. This was pre-election, and still a lot of the rumors around, or a lot of the views were quite negative, quite pessimistic, except we had Matthew Cumber join us earlier in the year, who's the managing director of Countrywide Surveyors, and he was relatively buoyant around property prices. He was quite positive. He felt this year would still be a good year. So I thought, well, I'd get to the end of the year and then reflect back, and before we invite Matthew to come and talk to us again in January, see how prices actually got on. So where are we kind of 10 months down the line? Where are we? Well, unemployment still relatively low. Inflation much lower, but actually more recently just running slightly above the forecasts that were in place from the Bank of England. Base rates have started to come down, but interest rates, particularly on fixed rate products, still remain quite high. And actually so many of those economic indicators that we talked about pre-election kind of remain post-election. But actually there's perhaps even more pessimism now, given some of the changes announced in the budget, things like employers' national insurance. So still a lot of negativity. But here's the thing. If you're a homeowner looking to buy another home, or you're a first-time buyer and you're thinking about mortgages, the most recent nationwide UK house price index that I think came out literally within the last few days shows that house prices in the UK have continued to increase. In fact, most recently, month on month, up 1.2%. Year on year, up over 3.5%. We're now in just 1% of the all-time high that nationwide house prices were reporting. So in spite of everything you heard, in spite of what goes on kind of from a pessimistic perspective, and in spite of some of the data around interest rates, we're still seeing a really buoyant housing market. Now, that will be in certain locations and types of properties. So this is an average, as always, kind of reporting at average level. But therefore, it got me thinking. So if you come to the end of the year and you're thinking about buying in 2025 and you're thinking about making your mortgage arrangements, where does that leave you? You're seeing house prices still quite elevated, in fact, quite buoyant. Actually, what does it mean if you're a first-time buyer? Well, if you're a first-time buyer, you are having to borrow in terms of a percentage of your monthly take-home pay. That is costing you more than above average in terms of the percentage of your take-home pay that's being used. So you've got interest rates remaining relatively high on a fixed rate basis, certainly. And even though there is talk, and Andrew Bailey, the governor of the Bank of England, most recently said perhaps we could see 3, maybe 4 base rate reductions next year, I seem to recall a very similar conversation at the start of this year, potentially. So here we are. So if you're a first-time buyer, it's looking kind of tricky, which actually is a really difficult call to go. House prices are quite high. When do I press the button? I'm really keen to buy. What can I do? Can I actually borrow the money I need to? So with Holly, bit of background there. So I thought I'd come to you and go, so given all of that, what are the lenders doing to help if you are a first-time buyer trying to get on the housing ladder?
Thanks, Richard. So there's quite a lot of things that the lenders are looking to do, notably for first-time buyers, I guess, is the thing that you'll see in the news the most often, with increased income multiples, which just basically means they'll lend you more for your income than other lenders potentially would. You have to hit criteria for them, but the criteria isn't particularly difficult, to be honest. So, as a company, we tend to put clients with those quite often because it can get them along that next step of the property ladder. So rather than potentially buying a flat and having service charges, and a lease to worry about, and then having to sell and then losing your stamp duty exemption as a first-time buyer, you can kind of skip that stage and potentially get to the first house by using those added income multiples for first-time buyers. So helping hand, first-time buyer boost, that kind of thing. And your broker will have access to all of those and be given reminders on those and know how to use those to the full effect. So as always, it is talk to your broker, because there may be things out there that you think you know what's going to happen and you know what you're going to be able to borrow, but in reality, you don't see this day in and day out, whereas your broker does. We literally have our emails filled up with our lenders trying to explain to us and tell us and give us extra things to help you with every single day. And it's, it's all there for the taking, but you have to know how to access them and what the criteria is for it. So there's additional income multiples. There is obviously the stamp duty lower amount for the time being, as we've mentioned in the last two mortgage bites. That is finishing 31st of March. There is still time. It will be a bit tight, but there is still time, definitely, if you find something in the next few weeks to actually get that through, depending on the chain and the solicitors and all those kind of things. But again, we're here to help you with that. We can push solicitors, we can try and speed up that mortgage application. So if you think you might be there or thereabouts, go and have the discussion now, because actually in reality you might be closer than you think. Other things include like deposit help. So stamp duty, income, tick can help with those, deposit as well. I spoke to a client recently who was like, look, I want to consider buying, but I really don't know where I'm at. Deposit wise, I've got quite a small amount and I'm stuck in that loop of renting versus saving. And when you're renting, it can be really difficult. And actually, there are lenders out there that will do 100% mortgages, and not the type of scary 100% mortgages that previous lenders have done, which have got people into trouble, but actually using your rental track record to evidence that you have paid a £1,600 a month rent for the last however many years, and then if you had a mortgage that was less than that, you would be able to afford that and you would then be on the property ladder. So there are all sorts of things. Concessionary deposit. So that's basically where if you had a family member that owned a property that you lived in, they can give you some of the equity and you can use that as a deposit. There's even landlord deposits where some lenders will let the landlord make a reduction on the house purchase price, and you can use that as a deposit as well. So there are so many things out there to help people. Most of those are first time buyer, but even if you're as a home mover, Nationwide have sent an email this morning. We don't have an awful lot of detail on it at the moment, but they're saying, look, we want to help home movers now. Can we do an increased income multiple on home movers? So although we don't have the specifics, that's something we'll get more info on in the next few weeks. So whatever your situation is, if, as you said, Richard, if you are sitting there going, actually, property market is something that I might be looking at in the next few months, don't hang around, do it now. Even though rates are a little bit up and down at the moment, they do seem to be leveling as well. And actually, it's not always about getting the very best rate. It's actually about getting something that's comfortable on a monthly basis, that's going to do what you need it to do and get you on the property ladder.
Perfect, thank you. And I can't help but reference, I ask you this question regularly and you give me the same answer around, well, maybe I'm worried house prices might suddenly go down, rates might suddenly go up. But I found a house I really like. What do I do?
Just go and have the conversation. If you sit there and play the game, I mean, people have been waiting for house prices to go down for, well, as long as I've been doing this job, 15 years, and it hasn't really happened. You do get little blips and you do get times when the down valuations happen, but we deal with them as it goes along, and quite often we can sort those out as well. So, do you know what? It's one of those things. You can sit and wait, but you do run the risk of them being placed outside of the brackets of being able to do anything, and actually pricing yourself out because either the rates have gone up or the house prices have gone up when you hope they go the other way, and then that can become more difficult to be able to get what you want and what you need.
Okay, thank you. And the other thing I'm just going to, I think, re-emphasize, because a really valid point, Holly, is if you are watching this and if you are thinking, I really want to try and buy my house and benefit from the stamp duty thresholds before the 31st of March, look, time is tight, but act now and talk to somebody. If you need to talk to somebody to find out whether you can make it work, what needs to be done, act now in terms of talking to someone. So I think it's a really good point, Holly. The clock is ticking, right? So yeah, that's great. Thank you. Holly, look, we really appreciate all the information. It's so difficult. And I think I honed in on first-time buyers today because I try and place myself in that category going, I think it's difficult right now. It's difficult because you see what you see with house prices. You've been watching this house price movement over the last few years, the interest rate position, and it's that kind of information that you've got access to with different lenders that's super helpful to talk about on things like today in Citrus Mortgage Bytes. So a huge thank you to you. Thank you to everyone that's watched Citrus Mortgage Bytes during this year. Look, we hope there's been something in here that's helped. We're going to continue doing this through 2025. As I say, in January, I'm going to be asking Matthew Cumber if he can come and join me to talk about his view on house prices again for this year. We'll keep you updated on what happens on the Bank of England base rate. So next decision is 19th of December. I think it's really evenly split right now. I think inflation's still running a little high. It wouldn't surprise me if we didn't see any movement in the bank base rate. We've had 2 reductions this year. That might be it for this year. But obviously we'll let you know. And when January, we'll then talk about, what are we seeing on some of the fixed rate activity for those people who are looking at what their borrowing situation might look like next year. So that's it from me. That's it from everyone at Citrus Mortgage Bytes. Thanks ever so much for watching, and we look forward to seeing you in 2025. Bye-bye for now.